which one of these energy companies is the best one to buy? Plug Power, Blink Charging, QuantumScape, or ChargePoint? I'm going to compare these four energy stocks across several metrics, and at the end, I'll answer which one of these four is the best one to buy right now. I'll start with looking at revenue growth across these companies, and of course, they are fast growing companies. And with the exception of, well, I guess you can say QuantumScape is a fast growing company, but it's just recently starting out generating revenue. So, very, very new. You look at revenue growth here, Blink charging at 192%. ChargePoint at 94% in its most recent quarter, and Plug Power at 39.6%. So these companies are expected to grow fast, although they are not expected to be very profitable anytime soon. And we're going to take a look at that next. So looking at cash flow from operations to sales, this measures how good the company is in turning sales into cash flow, or measures for these companies measures how much cash it takes for them to generate sales. And for Plug Power, for every $100 in cash flow from operations, I'm sorry, for every $100 in sales that it generates, it uses $118 in cash flow from operations. So it needs to use money to generate sales, and that's not the case for more mature companies who are turning sales into cash flow. These companies are turning cash flow into sales, so they're using cash flow to generate sales. In other words, they're using the money to create products and deploy services, create products, research, development, all of that just to get their products into the market to make sales, but they're not doing this at a level that's generating returns on those investments just yet. They're still going negative in terms of the investment bringing back sales. And that's the same for Blink Charging at negative 135%. QuantumScape, again, we don't have the data because it's so new. And then ChargePoint at negative 57%, although ChargePoint out of these four has shown the best progress in terms of reaching positive levels. You see this trend here, it's moving upward, negative 57%. That's an improvement, as well as being the smallest loss among these three. So ChargePoint is actually showing some progress towards becoming cash flow positive. Uh, Operating profit margin over the trailing 12 months shows us a similar story, with plug-in power losing a lot of money on the bottom line and making little progress to show improvement. Negative 94% operating margin. Blink Charging at negative 146% operating margin is the one generating the biggest losses for the ones we have the data on. Again, we don't have data on QuantumScape for this metric, but also Blink Charging showing nice progress, right? They were negative 480% 2019, and that's moved upward to negative 146%. So making progress, although still hugely negative in terms of profits, or you could look at it hugely positive losses. And then we look at ChargePoint, the smallest losses in terms of operating margin at negative 73%, but and also making progress in shrinking those losses, going from negative 120% or negative 110% up to negative 73% over the last several quarters, so making progress again on this front. So ChargePoint so far out of these four is the one that's making progress towards profitability and positive cash flows, while the others are still losing a lot of money. I guess you can say Blink Charging is also making progress towards profitability, although still hugely negative in that metric, more than twice. More than twice as negative as ChargePoint. Finally, I wanted to look at valuation to determine which one of these four stocks is the best one to buy now. And looking at it this way, QuantumScape, look the most expensive, on the forward price to sales ratio of 428. That's because they're just now starting up ramping sales, and their expected sales for 1 year ahead is still in its infancy, right? They're still just growing. And then meanwhile, the others are trading at a very similar valuation. Forward price to sales of 3.5 for Plug Power, 3.0 for Blink Charging, and 3.0 for ChargePoint. So very similar valuation for these three stocks, despite the fact that ChargePoint is the one that's closest to profitability. And it looks like it's also the cheapest, interestingly. The one that's closest to profitability is also the cheapest stock of these four. Now, before I answer which one of these four is the best one to buy, keep in mind these four are all very speculative, very high risk stocks to buy. Now, these should be only considered by investors that have a considerably high risk tolerance. So be ready for these stock prices to fluctuate by plus or minus 50, 60, 70, 80%. Do not be surprised if you experience price changes like that, maybe even in a single month, if not in, definitely in a single year. So this is not for the faint of heart. This is not for using money that you're going to need anytime soon, because the money you invest in any of these four stocks could be evaporated very quickly. So with that in mind, if you absolutely wanted to buy one of these four stocks, I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. I would say the best one to buy would be ChargePoint. It's the closest to profitability, and it's relatively speaking the cheapest in terms of valuation on the forward price to sales ratio. All right, that's all I've got for this video. As always, I truly appreciate your viewership. I really hope you enjoyed this video, and if you've stuck around this long, you probably did. So I'm gonna link you to a couple of other videos that I did that I think you're gonna like. So please click on one of those, and I'll see you over there.